Okay, on the higher time frame, it is pretty clear that Bitcoin is hitting a huge level of resistance. It is the value area high since November of 2024, and we also hit the 0.88 Fibonacci from all-time high to the pivot low here of April at $74,000 range. Now, in the past, we do know that the 0.88 Fibonacci is a major level that does get very respected and does get a pullback. So we are getting that pullback of a few $1,000s from that 0.88, which is in confluence with a value area high. Now, when we do take a look at the basics of Elliott wave theory, we have moved since the bottom at $74,000 in a 5-wave move to the upside. And we're also seeing the volume decreasing as we're hitting this resistance, as we are getting that wave 5 developed in the last couple of weeks. So as the volume decreases and we get into this extension, you might think it's probably time for a pullback. Now, it does look like it here on the higher time frame. The question is, where it gets more complex is the lower time frame, and that's what we're going to be focusing now in the next coming minutes. But let's just overtake here the higher time frame. If we were to get that pullback for the next few weeks before actually running and breaking all-time high, the big major level of support is the point of control. It's the previous month highs from April sitting at $95,000 range. As you can see, we do have that major consolidation, and we have the highest volume node here since November of 2024. So you would expect this area to provide significant support. However, when we consider the timing, when we look at this 5-wave structure to the upside, it could take a couple of weeks. So if we do break down here to this zone in the next coming days, well, you would expect some kind of a reaction at the highs of the last few weeks at $95,000, $97,000, also with that point of control. What we want to be aware is the potential bounce, if it is going to be impulsive or corrective, just in case we do get another leg to the downside to sweep the lows here below $93,000, $92,000. Of course, this would be seen as a major correction just for another opportunity before we head up to all-time highs in the next coming months, if this were to be the case. So this could be one of the last opportunities, just considering that what we're looking later on is for the next euphoric blast off in a wave 3. So the corrective moves that could happen in the next coming weeks would be a great opportunity, in my opinion, not only to buy Bitcoin or get into some swing long positions, but to accumulate those altcoins that will also see the pullback. Now, on the 1 hourly time frame, it's where it gets very interesting. Was this the local high and we are going to see a larger pullback, where we are considering either an A, B, C movement to the downside or a 1, 2, 3, 4, and 5, and what we will be forming throughout the next coming weeks is a much larger pullback, just because we have been rallying for over 5 weeks here, hitting the $105,000. That is the question. Now, we are going to be focusing on the 15-minute time frame now. However, I just want to let you know that we should be holding the 618 or the 78 Fibonacci if we are going to consider this movement to the downside corrective, and that we should be hitting again the highs above $105,800. However, if the price were to lose the lows here from Monday at $100,800, then this is an area where I will not be interested in getting into any long positions. That is for sure. And the main reason why is because we have a lack of support. When we do see this price action, there's hardly any volume in this big movement to the upside that we had here on the 8th of May, going from $97,000 all the way up to above $100,000. There's hardly any support. And just being a little bit concerned of, if we do lose this low, we could be breaking down in a wave C, which is usually much larger than your first wave A, or worst case scenario is that this is going to be a wave 3 to the downside, and we're actually going to come down to that point of control of the range at $96,000, $97,000 level, where we should be seeing the price bottoming out here, or at least forming a reaction here for several hours. Now, this would be a zone that I would be not interested in doing absolutely anything according to long positions. Now, just because I realize that there is no support and I would rather see the price action develop that movement and then analyze the situation once we see proof of support and look at the internal waves and the situation then locally. Now, when we do consider the movements here on the 15-minute time frame, just being aware of that situation. Now, this is a little bit tricky because this movement to the downside can be countered as an impulsive move in 5-wave structure. Now, the movement here to the upside can be countered also as a 3-wave move, just getting that resistance that we mentioned on a live stream a couple of days ago, where we're hitting the value area high and the 7/8 Fibonacci retracement from the pivot high to this pivot low, hitting that 7/8 Fibonacci, almost the 0.88. And of course, this is a zone to take into consideration just in case if this price is an impulsive move, then you would expect a lower high round about that region. Value area high, 7/8 Fibonacci. It's the last level here for the bears if they want to consider this movement to the downside an impulse. Now, of course, do we have other scenarios? Can we count this as a corrective structure right over here? Absolutely, yes. This can be counted as a double zigzag, as we mentioned a few days ago. When we do see this price action to the downside, we have a zigzag, possible corrective move right over here in your wave X, and then a zigzag here for your wave Y. And what is very interesting is that this movement to the upside could be counted as a 5-wave structure. Of course, that would be in an ascending contracting diagonal, which are not preferred really. If you do have some other type of movement, considering Elliott wave theory, you would rather prefer to count this as a B, C movement, and then we probably moving to the downside. However, there is that chance for this to be a contracting diagonal, where you do have a 5-wave structure. You got your wave 1, wave 2, wave 3 correction, and then your wave 5. Now, of course, this is making the situation a little bit difficult because this can be counted as an impulse or a correction. This can be counted as a movement to the upside in 5 waves, or it can be counted as a correction. So what is very interesting is this movement right over here. Now, yesterday we were talking about the possibility of this being a 3-wave structure. We got the bounce. This looks more corrective. And one scenario that I'm looking at here is a double zigzag, where you do have a zigzag, you get the bounce, and then here preferably you do get another zigzag, zigzag, zigzag to the downside, kind of a double zigzag and a WXY. And we can see that we're just holding the value area low right there. We just kind of dipping beneath the level, but we're trying to hold the golden pocket, which is our first level to see if the price can hold, right? This is where it's getting very, very confusing for a lot of people, even myself right now, just realizing that this counts as an impulse and a correction. This counts as an impulse and also as a correction. So this movement here to the downside is crucial. For the moment, it does count better as corrective. Let's leave it that way. The main reason why is because this first movement down does count better as a 3-wave structure, and then you get this bounce to the upside overlapping the lower high. So the probabilities of an impulsive move, a start of an impulse here, does decrease when you go with that theory. However, could you count this as an ABC flat? Well, the B wave did shoot over the 1.618 extension from this small little move. So that does also decrease the probability, but you need to give it a chance here for the 1-2-1-2 setup. And now you're building up the third wave. Of course, if this were to be a third wave, you're going to start seeing the price moving down very aggressively in the next coming hours. So anybody that is looking for this level to hold the golden pocket or the 7/8 Fibonacci, which would be your last level here for the price to form a higher low, it's either the golden pocket or the 7/8 Fibonacci. This is a dangerous zone. If these levels do not hold, I would no longer be interested in being in a long position here, because realizing if this is an impulse and this is the correction and this is a double 1-2 setup, you're going to see a very, very big movement to the downside to get below $100,000 potentially in the next coming hours, as if you are developing your third wave, you're going to start seeing big moves down and increase of volume, okay? So it's either hold the 618 Fibonacci or you hold the 7/8 Fibonacci. If you don't hold one of these two levels, I would no longer be interested in getting into a long position, just realizing the bearish case that we're actually going down below $100,000 and the movements could get very aggressive. So yes, we can hold the 618 or we can hold the 7/8. Let's just see in the next coming hours, because this still can be counted as some kind of a corrective move to the downside. It doesn't look too beautiful if we consider a multiple 1-2. However, it is a possibility. However, this flat over here, I do not like it just because the B wave is a little bit overextended, okay, when we consider this an ABC flat. So we want to be a little bit warned here about the higher time frame scenario. We have moved in a 5-wave structure. It does make sense for the price to get a pretty decent pullback, okay, potentially to the mid 90K levels here in the next couple of weeks, okay? So just an alarm that you need to have, right, to be ready that would make sense as we have come up all the way up here to this resistance here in a 5-wave structure. Guys, if you are interested in trading, remember that you do have weeks an incredible bonus, okay? You got 20% deposit bonus up to $400. You also can unlock over $30,000 deposit bonus, and you get 25% fee reduction when you sign up with the second link down below. You also have BTCC right now. This is a trading platform that I'm going to be focusing more on swing trading setups. You can unlock up to $10,000 on deposit bonuses when you sign up also with that third link. Both exchanges, you just need an email and a password. You don't need a VPN, okay? So make sure to use those links down below so you can get all of those perks. Now, focusing here on this area of the price of Bitcoin, it does look a little bit weak. It does look like it's going to roll over. It doesn't look too great to hold the golden pocket or the 7/8. We do have the bearish case scenario where you have this 5-wave move to the downside, this potentially a zigzag, and a double 1-2 here on the formation to break down in a third wave, 4-5, 4-5. You get the deal. It can get a little bit messy if we do not hold these Fibonacci levels, which are the golden pocket and the 7/8 Fibonacci. Now, if we were to hold one of these two levels, well, what I would like to see is the price getting a significant rally to the upside. If we consider this an ascending contracting diagonal, and this is a double zigzag, what I would want to see is the price moving up very aggressively here in an impulse, right? If we were to reclaim the value area low of this range of the last few days and we move up very impulsively, that is the moment that I would be looking at the price to continue to the upside. But I need this leg. I need this confirmation. Get that bounce with a 5-wave structure on the lower time frame. We're talking about the 5-minute, 3-minute time frame, and look for a steady correction to backtest the value area low, the golden pocket zone, and look for the rally here to claim the highs again. So that bounce to the upside would be crucial, okay, for me to understand, okay, this is looking corrective, we are moving up impulsively, volume is increasing, then you can confirm that this will very likely get that rally to the upside. Not much more here to be said. We want to be cautious. Price is just rolling to the downside. We're not seeing any proof of support at the moment, so we want to be cautious on that potential higher time frame correction for the price of Bitcoin. I would no longer be interested in any long positions if any of these fib levels are lost, and realizing that if we do dip down below the Monday lows, it can get a little bit aggressive. I would not be jumping in any long positions very, very quickly. We need to see the price develop, lose the levels, and start finding a little bit of proof of support, a little bit of a range, and then we can analyze the structure right over here for a potential reversal. Anybody that got into any shorts the last couple of days talking about the 7/8 Fibonacci and also sweeping up these lower highs, it's definitely one of those swing short positions that you would want to have open, just realizing that the price could really get into a larger corrective move when we consider this 5-wave move here to the upside, hitting the major resistance that we've been talking about here throughout the last few days. Guys, I'll be going live later on. Make sure to subscribe to the channel because we'll be focusing on what's happening internally on the lower time frame and look at the different probabilities. Thank you for joining, and I'll see you in the next one.